Imagine waking up one morning and realizing that silver doesn't have a real price anymore. Not because it crashed, not because it exploded higher, but because no one can agree on what it's actually worth. The number on the screen still exists, but nobody trusts it. Dealers hesitate, buyers ask questions, sellers pause, and suddenly, the market feels frozen. That may sound dramatic, but this is exactly how financial systems begin to fail. And here's the part most people miss. Silver doesn't need a price spike to break the system. Most investors are trained to watch for chaos in the form of sudden movement. Big rallies, sharp crashes, panic headlines. But the most dangerous moments in financial history didn't start with noise. They started with calm, with prices that stayed stable for too long, while reality quietly changed underneath. Before we go deeper, if you care about understanding silver, gold, and the global financial system beyond surface-level headlines, make sure you subscribe to Sayfee Metals Health. This channel focuses on clarity, not hype. And if you find this discussion valuable, please like and share it so more people can think critically about what's really happening. Silver is a strange metal. It's money, but it's also an industrial necessity. It's stored as wealth, but it's also consumed and destroyed in manufacturing. Smartphones, solar panels, medical equipment, electric vehicles, defense systems all depend on silver. Once it's used, much of it never comes back. That makes silver fundamentally different from gold, which mostly just sits in vaults. Now here's where the system becomes fragile. The global silver price is not set by physical supply and demand in the real world. It's set mostly by paper contracts, futures, derivatives, promises to deliver silver later. These markets are massive compared to the amount of actual metal available, and they only work as long as everyone believes the price reflects reality. But what happens when that belief starts to fade? A rising silver price would actually be easy for the system to explain. The story would be demand, inflation, speculation. Headlines would adjust. But a silver price that refuses to move while demand rises and supply tightens creates a much bigger problem. It signals that the price is being held together by structure, not truth. When silver stays stable year after year while inventories quietly shrink and industrial use expands, pressure builds invisibly. Miners struggle with rising costs. Refiners delay shipments. Manufacturers start securing long-term supply instead of relying on spot markets. And slowly, the physical market begins to detach from the paper one. This is where things become dangerous. Not explosive. Dangerous. At some point, participants stop trusting the quoted price. They don't rush to buy, they hesitate, they ask for delivery instead of contracts. Exchanges respond by tightening rules, extending settlement times, or changing margin requirements. None of this looks like a crisis on the surface, but liquidity begins to dry up. And when liquidity disappears, price discovery fails. Without price discovery, markets cannot function. A price is not just a number, it's a signal. It tells producers how much to mine. It tells manufacturers how much to use. It tells investors how to allocate capital. When that signal becomes unreliable, decisions stall. This is how silver can break the system without ever spiking. Imagine a world where the official silver price still exists, but no one can actually buy large amounts at that price. Dealers quote premiums that change daily. Industrial users negotiate privately. Governments stay silent. The market still appears calm, but underneath, trust is gone. At that point, silver becomes unquotable in practice, even if it's still technically priced. And when that happens, it doesn't stay contained within silver. It spreads outward. Silver touches energy, technology, defense, healthcare, and finance. Any disruption forces higher costs, delayed production, and strategic responses. Suddenly, a metal most people ignore becomes a pressure point in the global economy. What makes this scenario even more uncomfortable is that it doesn't trigger immediate fear. There's no dramatic chart, no viral headline. Just a growing sense that something doesn't add up, that the system is functioning, but only barely. History shows that systems under this kind of strain don't adjust smoothly. They hold until they don't. And when the adjustment finally comes, it's fast, not gradual. If this idea surprises you, I'd love to hear your thoughts. Leave a comment and tell me whether you think silver's real risk is higher prices or a loss of trust in the price itself. And if this perspective helped you see the market differently, please share this video with someone who still thinks stability always means safety. Silver doesn't need to rise to expose weakness. It just needs to stop telling the truth. And when a price stops reflecting reality, the system built around it has already begun to crack. Stay curious, stay aware, and make sure you're paying attention to what the numbers are no longer saying.